All right, good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast, February 16th, 2023. We'll start with the swing portfolio. Get my tablet. All these are on 30 minutes. This is a 10-day look back. Alcoa, we rode that nice trade down, had a -2 loss because of the gap. Recovered with this, caught a 2 and scored a 4R today on that one. It had given us a run up. It held support at the edge of the dragon, ran up again, and then as it started coming down, I said, let's just go ahead and take that. That's a nice move. And we'd already seen it had the opportunity to break and go, and it really didn't. So that was enough. Next up was Cliff. So Cliff is another one. We had enjoyed the short from the breakout box. We got hit -3 on that gap down. We got the recovery trade, and then again, this one, like the other metals, peaked, and I just took it here for 1, 2, 3. So it kind of scratched out that previous adverse gap. Like to get it back. CVS, we're just still stalking that one. There was a possible move on this one today, but I didn't take this. I'm stalking it. I'd like to see it hold and go. So if it could do that and break out above today, then I would be interested tomorrow with the idea that it could get to here. So if we can get something like this much risk, we could set that up and trade inside the channel. Low priority. Devon Energy was just a stock today. This was a nice intraday trade, but not the swing. You'll recall the -10% day that it had on this move, and how we got hit on that short, or we got hit on the swing because of the gap, made it up on the intraday move, and I was just basically staying away from it. Although we knew it was in play, and that was a legitimate intraday trade, but just not on a swing. Wasn't ready for that. Electronic Arts, it had started well yesterday on this triple bottom and a RLXD, but it opened and then started selling off, and I wanted to make that little piece and not let it go negative, which it did. So I'm actually really happy with that exit right there for 1/3 of an R. That I got more enjoyment out of making 1/3 of an R on that than I should, but there it is. Today, EEM, which we had gotten into 2 days ago, and then suffered the 1R loss on the gap. It had actually a nice follow through move in here. It was tradable, but we didn't have a position in that one. EWW, on the other hand, we had a nice caught 2 from here 4 days ago. Ran through this roller coaster, and it closed really well yesterday. And then today it just ran up, and that felt like that was it, because then it couldn't make new gains. So I decided to go ahead and cash the 1, 2, 3, 4 and make bank on that one. I really like that trade. If you had gotten out in here, then your re-entry was here on another COTA 2. Brazil, we're just stalking it. It just is in this tight channel between 28.75 and 27.75. Just not enough playable room for a swing. But if it could break above Like if it could give me a higher low and then break above, say, the 5 day high, then the move to the 10-day high is in play. And if that works, a second position there, playing all the way back to here. So I like that setting up well. The fact that it has failed to fail now gives me reason to have some hope for that move. But nothing overnight on that. International paper, I'm just suffering on this one, waiting for it to do something. It's still in this tight box here. This was a stop and reverse. So we had a nice 2 scoops to the downside, then stop and reverse. It started well, but it's just been monkeying around. Um, I wouldn't be offended if you got out here. It did a morning hook and is playing well and got above the dragon, and the dragon is reversed. So I'm going to give it one more day to see if we can't get above this 5 day high and start retracing some of this harsh sell off. U.S. real estate, there was a morning hook on this one on the 3 minutes, the gap down and then reversal. So there was an intraday trade there. I didn't take it, but I like that this is trying to make a COTA 2 here. So if it takes out today's high, I'm interested in that, getting back into that, because that looks like a move that shook out the weak hands in much the same way this did and at least allowed that move. The fact that it hasn't failed any further gives me some hope to the upside for real estate. McDonald's just cashed that one today. This gave a very quick morning hook, and all things considered, I think I should have gotten out there. And so when it did put this trade in, I felt like I was lucky rather than good. The better play would have been to take the exit somewhere north of the zero line, and then if that was the best thing going, try to restart the swing trade from here. But I lucked into that one. That was not very precise. Marijuana. So this one, we've got. We enjoyed the short here. Took the COTA 2 here. Today it started to resume. So I took the second position here once it cleared both of these resistance levels. That paid off. This was a speculation to hold it instead of exiting here and just enjoy that, which is a 1, 2, 3, 4, 5R on this one, plus 2. So we're holding about 7R on that one. So I was willing to give it one more bump and run, and let's see what it'll do. Clean energy, on the other hand, we had 3 positions on the COTA 2, the emerging dragon, and then a 2R battle drill. And then today, it had a gap down, tried to recover, and then started to fail again. So when the summertime RL10 turned to fall and it hit the PSAR, that was enough. So that third position was basically a scratch. And then this one earned 3 on the first one and probably 2 on the second one. So that's about a 5R sequence altogether. That's a pretty good move in clean energy. This is all happening while basically the S&P has done nothing in this whole tight range. It's just sideways choppy. Treasuries. Yesterday we took the collapsing dragon for a quick 1. There was a grinding downward move, and it's down around 101.5. Not a swing trade on that yet. I probably won't trade it tomorrow. But if it holds above 100, then the move to the upside is possible. Tesla was an SSC, standard risk. On this little R10 wiggle, the soonest I could get back into it was here on the opening yesterday. We rode that up here and it started failing and the market was weak, and I wanted to keep that second position in the money. So that gave us about 3R on the first one and you know, zero point 0.5 on the second one. But that's a pretty good oscillation, and it's failing right where it failed before, so I don't want to ride that all the way down. So I'll just take 3 and some change. Finally, U.S. Steel. This was another one in the metals that we'd enjoyed a nice run up, and it was starting to fail right where it failed last time. So rather than give it a chance to give me a gap on 2 positions, I just took the exit and enjoyed that, which gave us 1, 2, 3, 4 plus 2. That's about a 6R net on that sequence. And it's trading within that channel. So I could be persuaded for that move, you know, starting with the 3-minute and lather, rinse, and repeat. All right, so let's go to sniper trade. Where were you? Thought I had that queued up. Stand by. Okay, so this is Alcoa on the 3-minute. So it gap opens here, sells off, runs up to here, backs off to there. So that establishes our OR3. Then the second bar breaks through that, so we are long. And that's our standard risk box. It's a quick 1R loss. It then reverses again and goes straight up. So we re-enter and then it reverses again. So we take a quick 2R loss on 2 trades. So a total of 2R loss. 2 1R losses, false starts in the first 10 minutes. We get a COTA 2. Which is still like the governing pattern here. And again, same standard risk box. And that one, you know, that's about 2.5. So we're slightly back in the positive now. After that rabbit race to the top and roll over, and then collapses through the dragon, and then PSAR flip. Standard risk box. I'm looking for it to try to get back to something like this level. If it can fail there, I'd be looking to add a second position. Standard exit for a 1R. That rolls right into a COTA 2. Because you keep getting these higher lows. And then there's a clear target to the upside. And there's my standard risk box. and that gives me 2R to the top. That's the tactical space in there. Was lucky to get that one. Stop and reverse for a scratch. Stop and reverse for another couple. Stop and reverse with the second position to pick up 2 just going into the close. And so this one was like hitting a lot of singles today. And, you know, when the smoke clears, those 2 and that one scratch each other. So that's 2 and 4. So that's about a +6 day with just jockeying for position and essentially just trading this channel up, down, up, down, up. This was really one trade, but we got stiffed out of there and then essentially a re-entry and then down. So it was, you know, 4 waves inside a well-defined channel. Some days are like that. Let's take a look at the traders. Oops, wrong one. Sorry. All right, here's Gary. Let's see what we got here. So he's trading Devon Energy on the 3 minutes. Trying to read your chart here. He notes the OR3. He doesn't take that. There's the PSAR flip for like an SSC. I don't know if I would call that a harsh winter, but maybe so. That's at least a Kata 2. When this one is clearly a Kata 2 to the downside, that's a tradable play. It bottoms out here. And I'm trying to, let's see, K2 previous. I need you to work on those. Oh, okay, I see it. I'm sorry. There's our entry. He plays the RLXD, which is a little bit early because we would normally wait for this. But in either case, whether you enter here or here, you're on this one, you're front running the crossing of the PSAR. And as long as you respect that stop, you're in good shape. That's a great exit. And then this is that should be the reversal on your collapsing dragon, or you could even play that as the Kata 2, because what you have is lower highs. So when this one does not work and it rolls over, you can actually get short as it comes out of the dragon, or even hits that PSAR right there, or by the PSAR flip, and then that's a tradable position. This one is a tradable SSC to the upside. I think you're a little early on the. You're not letting the price cross the PSAR. It's barely nudging through the bottom of the dragon, but the RL10 was still kind of sloping up right here. So that's a bit premature, but you took a quick exit, and then that should be the Kata 2 that trades there, because it failed to fail. So you just take your 0.2 loss or 0.3 loss, and then you just instantly get on board that one. This would be the RLXD and the PSAR flip. This is reasonable. That's a great exit for 2.4. This could have been an SSC. You should not have lost money. You would not lose money on that one if you take it. You do take the crossing of the dragon. It's still a little bit early. I'd rather see you here. And you did get paid. So 2.1, that's pretty good work. Nolan, and he's got the Qs on the 3-minute. Here's the OR3 effort. Takes the 1R loss. Stop and reverse, that's a good play. Half an R loss here. He takes the re-entry of the OR3 here. That's probably over trading. Wait to see a pattern because you're going long where it's already failed twice after a big gap, and the R10 is still failing and in the winter. So I think that one was premature. By that time, you're okay to wait and see the bottom come in, and now you've got this trade. Even if you take this one like you did, that quick reverse, stop and reverse is still good. So you got the one that covers. I just think you got a little too, you got too chasing your own tail inside here. This one should probably be down here because you're starting to see the Z3s open up, and then definitely stuck around too late. You got to exit there rather than here. Like you should be short here, and then you get this move, which you should not lose money on. So altogether, minus 1.4. I just think it was late getting in, some over trading inside here, and that'll lead up to 1.4 pretty quick. Eagerness to get into it, I think, was the problem. Welcome back to Luke, who is finally kicking that the COVID bug. He shifted over to Trading View. He has I would treat that one as an SSC and try to enter here, but that's not bad. He's got a nice wide stop. This was an opportunity for a second position, and as this began to fail, he decided to take 2R and keep it. This would have been a re-entry. This could have been a re-entry, except he was not in the market at the time. And then when this rolls over, there's an owl entry, and he gets paid his no-lose plus dinner for 2 and brings home 2.5. Welcome back, champ. Always good to see you. Glad to hear you're feeling better. Here's my brother. So this was, I think, a big mover from yesterday in a symbol, the strongest symbol in a strong sector yesterday, and he was looking for another follow through. So I think he got out all of his position from yesterday except for 100 shares, which then he took the loss here and then re-entered for a scratch. Re-entered 2R battle drill, 2R battle drill, 2R battle drill, and quick out, netting 14.5 in 12 minutes. And at $100 a bullet, that's $1,450 net. Just think, if that's 5 12-minute periods, that's $7,000 an hour. And then finally, Woj had a bad headache today, should have quit earlier. But then when he quit because of the headache, he misses the moves that he would normally have gotten, like this one, and this one. You would normally expect his rules to dominate in there. Like that one, he typically dominates. So we'll mark this one up to not mentally conducive to trading when you have a massive headache like that. So all is forgiven. Let's get our report up here. Go to dashboard number 1. Bullish normal. The give back over the last couple days has given a little bit of weakness. The volatility just nudged into risk off and a warning. This was another reason for me to be aggressive with cashing some of those multiple positions in the metals. That had a lot to do with it. Min Pains, McDonald's, Cisco, JP Morgan, and Diamond. So those old school tech and conservative U.S. Still weakness in Disney, Intel, Nucor, 3M, and Microsoft. They are the furthest away from their 10-day high. Dow Tactical Summary. Lots of auto framers. Weakness in Tesla for a change. Strength in Cisco. Some triple screen patterns. 1.5DD in ExxonMobil, finally showing a little bit of weakness on the strongest stock. ETF Tactical. A large number of auto framers, including 5-1 in gold. That ought to make Constantine pretty happy. And there's a 6-1 in silver and a 7-1 in treasuries. That'll get my attention. I need to be on. Actually, I need to change my mind about trading that tomorrow and be ready for some buying pressure going into the weekend. That's what I'm going to do. There's all your framing data for those of you that are looking to do mechanical end of day trading. You know, this is 5 cents above today's high, 5 cents below today's low, a return to the 10-day high. And this simply computes your reward to risk, expresses it as ATRs, and then the reward to risk is expressed as the number of ATRs or range risks back to the 10-day high. Daily squeezes, I note ExxonMobil and McDonald's in there. The usual suspects. Getting into sniper territory. Oh, I'm sorry. I thought I had that framed out. Just a moment. Can't really read that, can we? This is horrible. Sorry. So in the S&P 500 for the Godzillas, we have one angry Godzilla here. That's in Akamai. That's the tech chip maker. And then all of the other ones are quiet, stealthy Godzillas. That's what it takes to be a Godzilla. You either have to be in the green, above 1, or below 0 on your 5-day volatility. And then you have to be oversold over the last 150 days and the last 30 days. Then it's a freebie if the 10 days and the 1-day volatility is just extra modifiers. So Electronic Arts is still in there. Johnson & Johnson. And I can't remember what K is. I think Kellogg's. That'll be interesting because of the very stealthy play that represents. A single letter symbol. Let's go see what K is. since we're here. Yeah, Kellogg's. I'm liking it. Yep. Now, this is of interest. I mean, it's had how many times to try to sell off from here, and it hasn't. And after every one of those, there were value players coming in and making that play. So, and it's moved up this far. And so you're not crazy to think it could get to 650 before all is said and done. So if you could put an intraday 15 cents, or if you used a full range stat, $2 on it, that's a reasonable channel trade. And it's a Godzilla because it has experienced such a huge sell off and is in the bottom 10% of its 30-day and 150-day high. Right? So, Kellogg's. Food insurance. Nothing from our tactical symbol set. OGN is of interest. It's a double volatile and a big one-day mover with a almost 8 sigma. And its 10-day and 30-day performance are pretty bad. Let's go see what an 8 sigma move looks like. Yeah, that's what an 8 sigma that's what an 8 sigma move looks like. A fall from 29.5 to 24.5 in one day. This is its 5-day high, 5-day low. So that was just that's pretty remarkable. How did it close? The last hour, it actually recovered. You're not allowed to be surprised if that holds tomorrow, or if there's just a quick sell-off and then a recovery back to something like this. Remember, after that big gap, that's where they were willing to open it and start buying shares on sale, and then it failed to here, and then this was all just marking time. That's just a sideways chop. So even if you waited for it to get above the dragon and entered here, 50% retracement, and if you use that much risk, 50% retracement gives you that. OGN, we'll come back and look at that one tomorrow and see how it does. I'm interested in that one for tomorrow. So, thank you, one-day movers. The Z-score of the one-day range, thank you. Standard framing statistics there. Now, what I did on this one, you can look it up on your chart, is I just, instead of just percentage returned for the day, I decided to organize this one by return to risk ratio. Basically, if it tested the 10-day high with a mechanical risk of the daily range, this gives you the reward to risk multiple. And the blue line is everything better than 2 to 1. So if we were to zoom in and look at those, that's just another way to find interesting tradables. So if you take that approach, this would be like for swing trading one day at a time, and you're sorting by reward to risk ratio. Treasuries is given 4.5 to 1, all the way down to Texas Instruments. Now, notice 3 of our typical traders are in that stack. There's a semiconductor, Texas Instruments at 2 to 1, Alcoa at 2 to 1, Devon Energy at 3.8 to 1, and Treasuries at 4.5 to 1. Even Microsoft is in that stack. So I kind of like this layout. This gives you what your 3-minute sniper trader intraday would be using for that minimum manageable risk box. Um, but if you go to my risk, which is usually like the daily risk, that's the risk that gives you this reward multiple. And it tells you what the 10 bar highest, the 10-day high is, and how much reward there is for it. And that one tells you what the R stat is, so how much it could move reasonably intraday. So this little method of sorting is appropriate for, you don't want to just know what they did yesterday, but what kind of posture are they in on the basis of the mechanical swing. And if you think the way we think, that the swing trade is right in the middle between day trading and position trading, the longer term. So signals that come out of the swing trade can be traded aggressively intraday or could end up growing to be longer term positions. So that's one of the reasons that I like to frame swing trades, is because it gives me ideas in both directions as well as ideas for the swing trade itself. Teaching men to fish. Here were some in our tactical symbol set, sorted by Z5. Here are some big one-day movers. Coinbase had some follow-through from yesterday's large move. Tesla and Mexico, large ranges. And then the only three that have exceptional 5-day ranges, Devon, VIX, and Bitcoin. So Devon Energy should be in play tomorrow, and I wouldn't be surprised to see Tesla and Mexico as well. Here's the only Dow stocks in the summer. That's how good Walmart is, man. How come I haven't been trading that? Let's go see what Walmart is offering. Why is that so good? Yeah, so this is not all that great. This was where it was really outperforming over the last 30 days. This is the 30-minute chart. And today it kind of sold off. So it's trying to hold inside this range. You should be an automatic buyer if it crosses that line, and you could be short if it fails through here. With the target, you'd be looking for down here. If I shift to the daily, you can see that this is like a fence sitter right now. That it's been in this sideways chop, and today it's near the top of that channel. So again, if it breaks out above 146, you can buy it, and if it breaks below here, you got an initial target down to the 10-day low, and if that breaks, then that eliminates that as support, and then your next support is all the way down here. So Walmart could be a stealthy straddle trade for tomorrow. Much more weakness than strength today. Treasuries and healthcare, diamonds, the S&P, NASDAQ, discretionary and tech. Only Mexico really dominated. Look at Mexico. Yay. Metals and mining. Yay. Cisco standing out from the crowd. Thank you, TC2000. Yes, sirree, Bob. Pushed the 150-day high to new heights. That used to be the 150-day high. All of that is gravy. And so now the argument is, as long as it can stay above today's low, then it's in uncharted territory to the upside. all good. But if it can't hold that and fails back through here, now you're right into this channel trade, and you're not allowed to be surprised if it comes back to 47. So if it falls through 50, you got a $3 move, meaning if you just risked $1, you could get 3 to 1. Cisco, let's go. And now in your trading value stack here, Ethereum, Alcoa, Clean Energy, Tesla, Oil Exploration. Second stack, Energy, Intel, Metals and Mining, Brazil. Looking pretty good. All right, that's everything for today. We'll get it published and posted and ready to get them tomorrow. Again, this is the last call for Creativity 202. We're starting the Sunday with a organizational meeting, and then it's a 30-week coaching session, personal coaching session, along with all that material. It comes with so much bonus material that it's almost free. Take good care, and we shall see you tomorrow. Yeah, Pascal, I'll send that out. It'll be the Sunday night session. It'll be Sunday at 8:30. Yeah, it'll be this room at 8:30 on Sunday night. I will send you out a note with some readings to do. But I think you're already invited into that session. So if you start looking at the first couple chunks, like the introduction and whatnot, that'll give you a leg up.